looking on the Brent crude oil and KL energy index to be what we call that on detail on note on the care energy index. So the thing is, we do think that the recent rebound on the Brent crude oil could actually signal something that we call a double bottom pattern in the Brent crude oil. So because of that, in line with how the dollar has started to ease slightly lower, so we think there's a decent chance for the commodity to picking up the pace in terms of overall momentum. So the double bottom in the Brent could actually signal or could have a stronger recovery, particularly in KL Energy Index. So on the KL Energy Index, we do note that the recent so-called rebound on 20 March is actually a completion of the wave 4 of the larger, what we call that 5-wave kind of a rally. So the rally was pretty much peak at 88 and at 885, and we have some short of the what we call that corrective move, and those corrective move has ended after what we call that reversal move within at 61.8 Fibonacci level, and of course above the steeper uptrend line. So the thing is, the KL index form something that we call a morning star pattern. So this is something that we call a bullish candlestick kind of reversal movement. So because of that, we think there's a decent chance for the KL Energy Index to trade higher, particularly to re-challenging the recent resistance at 885, and we have continued the ongoing uptrend, seeking to test the net resistance target at 935. So because of that, we are actually highlighting few stocks that worth to take a look, particularly on the oil and gas stock. So we did highlight few of the name earlier, but for today we want to highlight two stocks. One will be Armada. So Armada on fundamental we have hold, but on technical we do think there's a decent chance for the ongoing uptrend to continue, particularly when the stock to form what we call that a triangle pattern since March, early of the March. So the triangle pattern could be at the tail end. As you can see here, the stock is actually building a new and highly structured, nice along the 50-day moving average, indicating that overall buyers remain on the upside. One of the major concern is deep on the what we call that trading volume, but in general, I would say still pretty much okay. Now, a pickup in terms of the momentum could actually extend the ongoing uptrend, as the stock set to take out the what we call that triangle pattern neckline ahead. So a breakout above 671 cents could actually kickstart a new upcycle towards 73 cents and 79.5 cents, while the support will be between 61 and 63 cents. Then we have Charimin. So Charimin, one of the reasons why we highlight Charimin is because if you look on the long-term structure of the trend, it has actually start improving in terms of the overall trend. A sharp decline earlier on mid-March, as was followed by another rapid, what we call that, recovery on 22nd March. So you can see here, post recovery, the stock is actually building a decent, what we call that, baseline, decent new higher structure right along the 50-day moving average. So yesterday again, you can see the price is actually rebounding off the 20-day moving average along pickup in overall momentum. Is give you indication that the uptrend set to continue. So we put our technical target at 71 cents and 78.5 cents, while the support should be below the 200-day moving average at 62 cents. The next trading idea, we have MN Holding. MN Holding, if I recall, has been highlighted by T and Amira much earlier. So one of the reasons why we highlight, because the recent setback was pretty much kept within the 50-day moving average. You can see HR line remains supportive, and we do think there's a decent chance for the rebound to continue, extending the ongoing uptrend move in the near term. So we put our resistance or technical target at 37.5 cents and 42 cents, while the support or the cut-off level will be at 30 cents. Last but not least will be PK Group. So PK Group is actually our earlier buy on 17 January. We highlight buy on 17 January, and the stock goes up beyond our what we call that second target at 99.5 cent, is actually heading toward the high as 1 ringgit and 5 cent, gain about 19.1%. So after gaining 19% on 11 April, we saw how the stock is actually consolidating and building a new baseline right above the 20-day moving average over here. So in terms of our general momentum, it remain elevated, particularly when we see a new and fresh buy signal on stochastic, followed by a significant improvement over the trading volume. So because of that, we think there's a decent chance for the uptrend to continue as we actually reiterate our buy and put a new and higher target at 1 ringgit and 15 cent and 1 ringgit 32 cent, while the support cut loss has been revised higher to 96.5 cent.